Financial statements, final accounts, and the syllabus requires to start with the financial statements of a sole trader. Financial statements of a sole trader. Financial statements of a sole Now, a sole trader, also known as a sole proprietorship, a sole trader or a sole proprietor or sole proprietorship business is a business owned and operated by a single individual. And the structure of this business is simple. It is simple to set up. It is simple to manage. But it may also come with certain financial reporting requirements. One of the key financial statements for a sole trader is an income statement, also known as a profit and loss account. Now, the profit and loss account shows the revenue earned and expenses incurred by the business over a specific period. And it is this statement that helps us to determine the net profit or loss of the business. Then we have the statement of financial position, which is also known as the balance sheet. It is a statement that presents a snapshot of the business financial position at a specific point in time. And it is through the business that we can know the assets, the liabilities, and the equity of the owner. So we are required, first of all, to cover the two financial statements of a sole trader: the statement of profit or loss and the statement of the financial position. I've just said the statement of profit and loss account. So the first statement is a statement of profit and loss account. First of all, we've defined a sole trader. Sole trader business is also known as sole proprietorship. It is a business that is owned by one individual or one person. So sole traders are required to prepare statement of profit or loss account. It is through this statement of profit or loss account that we are able to determine whether the business is making profit or is incurring loss at a specific point in time. So the statement will have revenues and expenses, just two things: revenues and expenses. Revenues and expenses. It helps us determine the net profit or loss of the business. So it will have revenues like sales, services. It may also have expenses like rent, salaries, utilities, airtime. All expenses that are incurred by the business are recorded in the profit and loss account in the process of determining the profit or loss. So it is profit or loss statement. Statement of profit or loss. Now let's look at the structure. Structure or format. Let me use the word format. Format. Let's look at the format. Now, there are two formats, candidates. The conventional, the traditional format, the T account. The statement of profit or loss may be prepared in form of a T account, where we record the revenues on the credit side and expenses on the debit side. So for a business, the first revenue would be sales. So we record here the sales. Then on the debit side, we'll have the cost of sales. Cost of sales. So here we'll have the opening stock, we add purchases, if there is carriage inwards, we add here carriage inwards. Now carriage inwards is just the transportation cost on purchases. If these purchases, when buying these inventories, if any transportation cost was incurred in the process of buying these inventories, then we add it to the purchases. Then we deduct the purchases returns. Purchases returns we deduct. Now, after purchasing from suppliers, it is possible to make sometimes returns. Maybe the supplier has delivered goods that were not ordered, or has delivered goods in excess, or goods are damaged upon delivery, so the returns are made. So when that happens, then we deduct that from the purchases. Then we deduct the closing stock or closing inventory. We deduct it from the total here. So what you get down here is what we are referring to as the cost of sales. So here on the credit side, we have sales, then we may deduct sales returns. After selling, we may have returns inwards. Customers may also return what was sold to them. So when that happens, we deduct from the sales to get the net sales. So from this net sales, we deduct the cost of sales. This amount, deduct from that amount, we'll have here what we call the gross profit. The gross profit. So that account, we will close it. We come here and close. So see, we have the gross profit. If the net sales is higher than the cost of sales, we'll have here the gross profit. But if the cost of sales is higher than the net sales, then we have the gross loss. Gross loss. So that is what we call the trading account. Up to this point, we have the gross profit, which we bring down here. Gross profit. Bring it down. This is the gross profit brought down. Then, if there is any other income, like dividend, like income, like interest received, we add to the gross profit. That could be discount received, we add it to the gross profit. Then on the debit side, we deduct all expenses like salaries, rent, electricity, water, airtime, stationery. All expenses have to be debited, so that we then compare all these revenues on the credit side with the expenses on the debit side. If the total revenues exceed the expenses, then we will have the net profit. But if expenses exceed the revenues, we'll have the net loss on the credit side. Net loss. So that one we get the total and close. Get the total here and close. So that is the format of a statement of profit or loss. A T format. So the reason I'm doing this, so most of you read books, you may find some books presenting the statement of profit or loss in this format. This is the horizontal format, the T format. This is the traditional format. Today, this format is not in use. Today, if you are asked to prepare a statement of profit or loss account, then you have to do it in vertical format. So here is the vertical format of statement of profit or loss, vertical format. So we'll have two columns here for the amounts, two columns. So we begin with the revenues, sales, have it there. Then there is sales returns, or returns inwards. We have to deduct sales returns from the sales to get the net sales. Net sales. Then from the net sales, we will deduct the cost of sales. Cost of sales. How do you calculate cost of sales? First, you take the opening stock, add purchases, deduct purchases returns, so you have opening stock, write it in the first column here. Purchases you add to the opening stock, purchases returns you deduct, or returns outwards. So it's known as purchases returns or returns outwards. Then of course we have the closing stock, which we deduct here. The net is a cost of sales. So what we have is the cost of sales. So this cost of sales deduct from sales to get the gross profit. Gross profit. Then we add any other income to the gross profit, like rent received. If the business has rental income, we add it to the gross profit. Discount received. So these ones we have in the first column, we have expenses here. For these are not expenses, but these are incomes. We add to that. Then we get the total income here. This is total income. Now from this total income, we deduct the expenses. Business expenses like discount allowed, insurance, airtime, and so on. So all the expenses are listed in this first column. List all the expenses, put down all the expenses, including depreciation of fixed assets. We have all the expenses here. So we take the aggregate of the expenses and deduct from the total income. So these are total expenses, deduct from the total income. So what we have here is either profit or loss. Either profit or loss, depending on the total expenses value and the total income. If the total income is higher than the total expenses, then you have profit. But if expenses value is higher than the total income, then you have the loss. So that is how to prepare a statement of profit or loss. There are two ways: the horizontal format, the vertical format. The horizontal format is a traditional format. Today, you are required to prepare your statement of profit or loss in a vertical format. Is that well understood? That is the format of a statement of profit or loss for a sole trader or a sole proprietor. Let's have a brief illustration. Let us illustrate with a question. From the following trial balance of Rehema Enterprises, draw up a trading profit and loss for the year ended 30th September 2023. I want to remind you something from that statement. From the following trial balance of Rehema Enterprises, draw up a trading profit and loss account for the year ended 30 September 2025. You can see, candidates, we are to draw the final account. Look at the board. We are to draw the final financial statements, which we said are also known as final accounts. For you to draw up the financial statements, like the one we are calling statement of profit or loss account, you must have a trial balance. It is from this trial balance that we prepare the financial statements. And for you to extract a trial balance, you must have ledgers. You must have drawn up ledgers. It is on the basis of ledgers that we prepare or extract a trial balance. And you cannot have these ledgers without the journals. We use journals to prepare ledgers. And these journals, which are also known as books of original entry or books of prime entry or subsidiary books, are prepared from source documents. And these stages, candidates, defines accounting as a process. This is the final product. But for you to come up with the final product, there are stages. And so far we've done the trial balance, we've done the ledgers, we've done the journals, we've done the source documents. So it's a process. That's why now that we are required to prepare financial statements, we are given trial balance. That's why we are reading from this question that from the following trial balance, do what? Draw up a trading profit and loss account for the year ended 30th September 2015. So accounting is a process, and these are the main stages in the process of accounting. So the current topic is financial statements of a sole trader. In our next topic, we'll be learning how to prepare the financial statements of a partnership. Then we'll move to the financial statements of a company. We'll go to the financial statements of a manufacturing entity. We'll move to the financial statements of a not-for-profit organization. So let's prepare this statement. Now, in preparing financial statements, we must begin with the name of the entity. The statement of trading profit and loss account is being prepared for the company known as, or the business sole proprietor is Rehema Enterprises. So at the top here, we must have Rehema Enterprises. Then the name of the statement. The name of the statement is Trading Profit and Loss Account. Trading Profit and Loss Account for the year ended December 2015. So you must have the date at the top and the name of the enterprise. So you'll prepare this statement in a vertical format. So you're going to have two columns for the amounts. Are the amounts in thousands? Yes. So we come to the revenues. What is the first revenue there? We go through the question. On the credit side, the revenues balances will always appear on the credit side. The revenues will always appear on the credit side of the trial balance. And the first revenue there is sales. Sales 18.6 million. Do you have sales returns? If there are sales returns, then the returns will appear on the debit side. Do we have returns inwards? Yes, the fourth item there, return inwards. We deduct return inwards, also known as sales returns. The amount is 205,000. Deduct from sales, you get the net sales. How much is it? From net sales, we deduct the cost of sales, beginning with the opening stock Opening stock, we have the opening stock. The first item there is the opening stock 2368. Add purchases. Purchases 11,874. 11,874 is the value for purchases. Do we have returns outwards? Yes, returns outwards, also known as purchases returns. Return outwards. Return outwards will always appear on the credit side. 322 we deduct. If there is any closing inventory, yes, below the trial balance we have closing inventory. The closing stock is 2946. We deduct. What we get here is a cost of sales. We deduct the cost of sales from the net sales to get the gross profit. So give me the net 18,370, 18,395. 18,395. Net sales 109.74. 109.74. How about the gross profit? 74.21. Now, candidates, up to that point, that is the trading account. Trading account. The last item in a trading account is either gross profit or gross loss. Either gross profit or gross loss. That is up to that point. The trading, we've done the trading account and we've seen that there is a gross profit. Now on this gross profit we add any other income. If you want to know that this business had any other income, check on the credit side of the trial balance, because income accounts always have credit balances, and we see there is no any other income. So we move straight away to the expenses. We deduct expenses. We check if there were any expenses, and all expenses will always appear on the debit side of the trial balance. And looking at this trial balance, we have carriage outwards. Carriage outwards, that is just transportation costs. Carriage outwards, that is an expense. Carriage outwards. Carriage outwards is 200. Then we move down the debit column. Debit column, we have returns inwards, returns outwards, purchases, sales, salaries. That is an expense. Salaries and wages. Salaries 3862. That's the value for salaries, followed by rent. Rent is the next expense, 304. After rent, we have insurance. Insurance is an expense, 78. Mortal expenses. Mortal expenses, 664. To mortal expenses, we add the office expenses. Office expenses. Office expenses, 216. The next expense there is lighting and heating. Lighting and heating expense. Lighting and heating expense, 166. 166. Then there is general expenses. General expenses. General expenses is 314. That is general expenses, 314. I don't see any other expense here, because below general expenses we have premises, that is an asset, motor vehicles, that's an asset, fixtures, that's an asset, debtors, that's an asset. Then there is creditors, that's a liability, cash is an asset, drawings is a drawing, capital is just capital. So give me the total expenses, deduct the total expenses from the income or the gross profit. Then the last item here is either net loss or net profit. So give me the total expenses. 5804. 5804. 5804. Deduct 5804 from 7421. What is the net profit or net loss? If it is 5804, then this is a net profit. John says 1617. So we put two double lines there. 1617. That is the net profit. So that is how to prepare a statement of profit or loss.